a very wobbly stock, and I use the word wobbly, I would say Peloton. Peloton was one of those stocks that did well during the lockdown. It did extremely well. The stock price was up, and suddenly it went down. Obviously, during the lockdown, people were buying Peloton excited because people were at home, sitting down, buying things, doing nothing. It was bored. But it just shows you that some of the businesses that came up during the lockdown, they're not sustainable. Now, the CEO, McCarthy, said that they are doing aggressive turnaround. Peloton has a mountain huge expense and is losing money. They missed on top and bottom. They actually posted wider than expected loss. Get the word, wider than expected loss. That means you are not expecting them to make money. They expect them to lose, but not as wider as they did. Peloton has been nothing but abysmal. Let's have a look at the details for the earnings, Q4 earnings. The actual revenue is 678.7 million. What was expected is 685.9 million. The adjusted EPS is $1.32. What was expected is 0.97 cents. It is significant in EPS because it still posted wider than expected loss. Another fundamental thing which is key for investors, Peloton did not provide guidance for its full year, the full fiscal year, no guidance. Let's have a look at the details of the earnings. Let's have a look at the chart to see price action. Let's have a look. Here is the summary for Peloton Q4 earnings. Peloton shares plummet after company reports a big loss and declining revenue. Peloton reported a wider loss in its fiscal fourth quarter as sales declined and costs mounted. The company under CEO Barry McCarthy is carrying out an aggressive turnaround plan. Peloton did not offer an outlook for fiscal year. Peloton on Thursday reported widening losses and slumping sales for its fourth quarter as the connected fitness equipment maker attempt to win back investors with cost and strategic shift. The company shares declined more than 20% a day after the stock surged more than 20% on the news of its partnership with Amazon. It marks Peloton's sixth consecutive quarter of reported losses. The company said it aimed to reach break-even cash flow on a quarterly basis in the second half of its fiscal year 2023. Still, Peloton CEO Barry McCarthy said he expects the market for connected fitness will remain challenging for the foreseeable future as consumer demand for at-home workout machine wanes from COVID pandemic. This is what I was saying earlier. The pandemic actually held their sales during the lockdown. You know, a lot of people were sitting at home, but now that people are, more interested in going out, people can afford to go to the gym. There's zero COVID these days, so having an inside the house equipment is less encouraging. Since McCarthy took over as chief executive from Peloton founder John Foley in February, the company has pursued sweeping changes that have yet to full payoff. Peloton raised membership fees, hiked prices on some equipment, laid off thousands of workers, tested a rental option, exited last mile delivery, and transferred all production over to third parties. On Wednesday, Peloton also started selling a portion of its product on Amazon in the United States. It first such deal with another retailer. The naysayers will look at our fourth quarter financial performance and see a melting pot of declining revenue, negative gross margin, and deeper operating losses. McCarthy wrote in a letter to Peloton shareholder. But what I see is significant progress driving our comeback and Peloton long-term resilience, he said. We still have work to do. Peloton did not offer an outlook for its upcoming fiscal 2023. For the first quarter that ends on September 30th, it said it sees subscriber staying flat and revenue ranging between 625 million and 650, which is short of analysts' estimate. Peloton said this takes into account near-term demand weakness and seasonal fluctuation to the business. There was a silver lining for the company. This marked Peloton first reported quarter where high margin subscription revenue accounted for the majority of total sales. During a call with analysts, McCarthy also touted a number of things Peloton is still testing to drum up sales. Those include selling pre-owned bikes, renting bikes for a monthly fee, and adding new tires to um, a Peloton digital app, including a premium tier where people would pay more for expanded content and better features. It is not enough to just cut expenses. We have to grow revenue, he said. Look, when it comes to this Peloton stuff, it is far more important that you understand that as an investor, this McCarthy is the CEO. He's bound to sell. He's bound to sell good ideas. He's bound to say good things about it. As an investor, what is far more important to you is checking the books, knowing that this business will make money. Maybe they are not making money now, but there's a prospect. But it's all got to be in the number, not by statement. Let's have a look at the chart for price action. Here is the technical chart for Peloton Interactive. Let's start with fundamental information. Um, the market capitalization is 3.47 billion. The shares in float is 296.9 million, and shares outstanding is 331.6 million. The EPS rating is 1. The EPS growth is not available, not applicable. 5-year pay range 152 to 1469 as a high. Peloton is relatively still, a new stock. I mean, it really championed during the lockdown. The EPS, it's negative, negative, negative. It's still negative. Peloton is not making money. Peloton was recently, not making money. 52 weeks high is 120, and 52 weeks low is $8. So if you know the history of Peloton, then you would know that having it at $8, a stock that has been around 180. Anyway, let's have a look at metrics. I doubt it's going to pass any of the metrics, but then um, yeah, let's look at the owners. Funds 48%, banks 1%, checklist, yeah, 2 out of 13 for Benjamin Graham. Warren Buffett, let's see, Warren Buffett 1 out of 16. Peter Lynch, um, yeah, I don't expect it to really pass any of this anyway. So let's have a look at technical information. Peloton is currently trading below 10 weeks moving average and 40 weeks moving average. The 10 weeks moving average is the red line here, so which is the moving average is below it. That's this is supposed to act like a support, but it's not. It's actually below the line, and this is a 40 weeks moving average. There's not much to say about Peloton other than you can see it is trending down. is a downward trending stock. The level of resistance here that was broken, and the level of support here. But then Peloton is it's nothing but abysmal. Let's look at it on a daily chart. If you own Peloton stock, you would know that. You see, this is a daily chart. Is there a need to actually do anything here? You can see it is downward sloping. You know, seeing the details of the earnings for Peloton. You have seen the price action, guys. Watch out for stocks. Watch out for phobia. Watch out for fear of missing out. Watch out for people, when you have a neighbor or when you have friends, when you have people who don't know anything about stock market talking about one stock is going up, run away from the stock. That is the kind of stock you should move away from. Do not, when you see people who have no experience, who don't know about stock, suddenly they wake up a bit and start telling you about AMC and GameStop, Peloton, and Nicola, workers. Be careful. Do not put your money into the stock. Check everything. Check the nitty-gritty. Check, use the right valuation to see. Thank you for watching this channel. We continue to produce content that will support your investment journey. Please call again.